Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for Tuesday, and we're at the 17th of January, 2023, and getting on about 6:20 p.m. It's good to be back from vacation. Needed those few days, and I am definitively refreshed, and that's the good news. Went to Puerto Rico, loved it, never been there. It's beautiful if you've seen old San Juan. I guess they have St. Sebastian holiday coming up. They tell me 500,000 people will flock into the city. I went there the week before. I didn't even know the holiday. And you can't even get near a hotel, they tell me. The buses drop you off. They close all the streets there. It's quite an event, and they haven't had it in a few years because of COVID, so you can imagine. But getting to the markets, we're looking at markets that are all over the board right now because we've begun the earnings season. And you'll see the chart that I decided to go with today is going to be Goldman Sachs. Might as well take a look at that since they got hit pretty hard. Today, Morgan Stanley reported their earnings looked better. Their wealth management division did a great job. But you're starting to see companies that are going to be in the vein of a Goldman where they have to cut costs. And we're going to see that not just in them, but in company after company. And then the question is, how much can they raise prices, or what can they do to keep the revenue stream coming on board and getting better as they're cutting costs? And it's a difficult task to do. There's no question. The argument, very clear that people are still arguing, are we going to go into a recession this year? I think the consensus is that we will, but then it's a shallow one, almost to an analyst that's looking at it, unless and until labor gives up. And that's been the issue, is if labor stays strong and people believe they're going to have a shallow recession, they're not going to let their labor force go. And this is the quandary. You have to be talking things are going to get a lot worse, and then management says, oh, we can't afford to keep these people on. And we've seen that in the Amazons. We've seen it in different companies that are doing that already. Goldman's one of them, leaving, going 3,000 some odd people. So you're getting that going on to a degree. But the smaller and mid-sized companies aren't doing that. They're picking up those people, and they're arguing that, hey, things aren't that bad. We can live, and we need people. That is the big argument that we're going to have for a bit here. Price earnings, well, they have been falling. I think you realize that. That's another thing that on a break could cushion this market. You'll get down to numbers that instead of big PE ratios, they've gotten smaller over the past 6 months, and that's another cushion you've got to deal with. So, as I said in Goldman, interesting day. If we take a look at what this market did, and I do want to come back if I could here. If you look at the low here, it's 362.36, and this was on Friday. And the day before, it was 362.57. Got it? So what we had was an outside day up. And one of the things I teach in my course called Outside Days, if you take that out, be careful. You're probably going to try to make a run to the next main moving number under the market. And if you're looking at moving averages, it would be that. Let's go to that. Here's the big break as you took out this break right through here. Where did the market go? Right to the 18-day average of closes. What stopped the rally? What do you think? Take a look at your Bollinger Bands. You got up to it. You tried to soar over it on Friday, got thrown right back. There's layers of support under this market as well. You got the 18-day average, and that's about where the market stopped on the break. Then you've got 342.31. You have to get under 340.14 in order to break the pattern of higher lows, higher highs. What about overbought, oversold? Coming into today, and we can just show this. Look at how overbought you were at the upper Bollinger Band. I teach over and over. Markets don't like to stay over Bollinger Bands. Only 5% of the time did they do so. And you had 3 days in a row where you were over it. So to get going into earnings, a surprise? Nah, not a surprise to me at all. When we look at LIT, look at how this market has rolled out of its bearishness back here, didn't make another run to the Bollinger Band, and lost the bearish reading. It just took off to the upside, the 18-day average, and then it continued. But it is overbought. It's in a key resistance area. I expect nothing but problems now from 65.40 to 68.05 to 70.32. The next thing that I'll look at is Apple. Today, where did the market go? It went right up to the upper Bollinger Band, and that's where the first real resistance is. So as it ran the lower bands and lost the embedded reading, again, it's when the red line pops back out and over a 30 level. When it did that, game over to the upside and away you went. Now I'm looking for the market to have resistance problems right where it's at. Yay for AMC. The market here bottomed itself out, lost the embedded reading, just like I'm showing you on the other markets, and took off. Do I think it's going to be able to sustain itself quickly and continue to stay over the upper Bollinger Band? No. I think it'll chop around, pull back into it. But I do think for the near term, we've seen the low. Now, my good movie, Avatar, is ending. I got back home and I was just looking to say, okay, this weekend I'll go see it. It'll probably run its course. Well, it's run its course. It's out of all the AMC and Regal theaters in my area. Starting on Friday as a new slew of movies are coming in. I don't like that. I didn't see it and I wanted it in IMAX and the 3D. In any case, overbought there, but I don't want this chain to go away. I want to see all the chains that are left get smart about it. Funniest thing is I'm seeing new, smaller theaters starting to open in the Chicago area. 6-screen theaters, different type of atmosphere, the drinking, the dining and all that, but brewing it different. I don't know if you've seen the new chairs they have in movie theaters. They call it, what, 4X or whatever. They move as you're moving around in the movies. Pretty crazy. I remember Smellorama as a kid and other things that they'd come through the theater. It was nuts. Are we going to embed an XLF? Well, here's your financial service sector. Get nervous if you take out the lows of Friday. That's what you have to care about. Until that's taken out, do we embed? Embedding requires 3 days in a row of where the readings in the slow stochastic stay over 80. You have 1, 2, was Friday and the day before. You've got your readings. Those were the 3. Got them? So now what I think is going to happen is the pros will use that on the breaks to try to buy the market. And if you lose that reading under 79, I'm thinking you're going right back to the 18-day average. So you're in a very interesting spot right here. In the industrial sector, the battlegrounds, the upper Bollinger Band in an overbought market. Now, I think the pros came out while I was out of town, right in that area, and I think they're walking to the sidelines in the industrial sector. In the semiconductors, maybe you'll embed by, let's say, Thursday. Got to wait and see. Would I ever tell one of my clients to buy a Bollinger Band? It's never going to happen. That doesn't mean I'm bearish. It means I'm looking for better ways to come in the market. And once you learn how the Bollinger Band works, when I tell people to come out against Bollinger Bands, it doesn't mean I'm bearish. It means you're at a spot where the high probability is you're going to pull back down in the market. The question is how far, and that's what I work with you on. In the home builders, we get the home builders numbers tomorrow, so we want to see how home sales are going and so on. You have an embedded reading, so let's see how the market does on a pullback, and let's see that report. It comes out first thing in the morning as to the impact on the market. In the energy sector, if you're going to have a shallow recession, you're going higher in energy. If you're going to have a deep recession, it's different. China's representatives went to Davos, and they were there, and they are talking up the fact that, yes, they only had 3% growth in 2022 instead of 8.1% that they had or so in 2021. But they think that they've seen their low point. They also think COVID has peaked. Now, my problem with that statement is no numbers have been given to the World Health Organization other than 60,000 deaths. They're not getting all the numbers they need. And we have the lunar holiday coming. People do, in the lunar holiday, an awful lot of travel. I don't trust this whole thing. I would be very careful. But if it is over, I can see energy prices going higher. You know, you still have Goldman and others saying we'll be over $100 a barrel shortly. OPEC's coming out, and they came out with their demand forecast today. I wrote about it in my newsletter, and they're still seeing excellent demand for the overall oil market. Interesting, OPEC also said they're willing to price their crude as they sell it in currencies other than the U.S. dollar. In the end, somebody's going to hedge against the dollar. In the gold market, you have a fully embedded reading. So as far as I can see, until the red line closes under 79, pullbacks in this market should be bought. Close under 79? No, then you can get back to that 18-day average, but you haven't done that yet. In the silver market, different. Gold is stronger than silver right here. Very much sideways action and not much more than that at this point. In the copper market, it was a fascinating day. Once we saw the Chinese GDP come out at 3%, the market in copper fell 10, 11 cents a pound. And then as the Chinese representatives started talking up the fact that they're looking for the lows, blah, 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 the market reversed course and went back up 10 cents. These are wild swings in the market, but overall, I think there's going to be a shortage of copper in a major fashion, and I'm not looking for a worldwide deep recession, and therefore I think copper on deep breaks is a buy. The question is, I don't think you're getting back easily under these lows, so it's on the pullbacks here that I would be surprised if you don't see graduated buying on pullbacks as long as you stay embedded. In TLT, I look for resistance here, and please remember, it's the 17th. On February 1st, we get the FOMC meeting. This market is starting to now digest that and figure out what it wants to do. When we come to UUP, you can see how the market's been riding the lower Bollinger Band, but it is oversold. It has to embed to keep this momentum going. Otherwise, a correction is probably in the cards, and the flip-flop then happens in FXE, and you could already see how the market is having troubles there at the upper Bollinger Band. So you put it all together, and what do? Well, I hope you join me in the mornings when in my subscriber video, I tell you what's coming on in the day's events. We've already, by the time I start recording, which is 9 a.m. Central Time, seen most of the government reports, what's happened abroad, and then we start building the trades. And we cover 40 some odd markets. These all change all the time. Just like you saw me change here at Goldman Sachs, I change it there for the subscribers too. And we try to stay with the hot markets as they're going on. Hot could be up or down markets, but we watch it. There'll be bonus weekly videos very shortly. Probably next week, I'll do my first live webinar of 2023. No point in doing it right here. I think next week's the best time to do it. And we build trades together in the morning. We look at the technical analysis, daily and weekly charts, try to build from there, trying to catch trades that make some sense and see how long they can last, blah, blah, blah. How do you get all this? Go to our website. Under the word research, it's right there. You can also click up here. There'll be an icon. Give that a hit, and away you go from there. In the meantime, I'm Ira Epstein. I'll see you in the morning. Have yourself a good evening. Take care.